Today is Saturday, August 15th. This is my weekly stock market review, and this is an outline of what I will be going over today. So, starting off with the indexes, they are still looking great and they are tightly trending higher, which is what you want to see for a bull market. This tight trend allows for sector rotation, money to keep consistently pushing stocks higher while also rotating throughout the sectors of the market. I'll take a look at SOX, DRAM, and Photo, three key ETFs which I have been keeping an eye on. They are all fighting their 50 daily moving averages, and while they are not leading, these sectors are still very important to watch and to get a pulse on the market, see what's going on underneath the hood. So next, I'll take a look at a couple leading sectors. Software through IGV and cyber, the cybersecurity names. They are still pushing all-time highs. They are looking great. They are leading the market currently. I'll also look at healthcare stocks and more specifically the biotech companies through XBI and IBB. I'll look at the financials, which have been trending higher, trending nicely. The big banks look very good, and also the KRE, the regional banks, look very good as well, which is what you want to see for a bull market. I'll take a look at the industrial stocks. I'll take a look at the aerospace and defense names, and I'll take a look at energy and the staples. Energy has been pushing higher, obviously, with the price of oil pushing higher, but the staples also look very good, which is a defensive sector. So that's not, you don't really want to see the staples rallying into all-time highs, but I will point out and show the chart of how they are holding up. I will say the staples can rally in a bull market. Everything tends to rally in a bull market, but I'll just point out and look at the staples in general. Gold is also still rallying, looking at GLD and the gold miners GDX. And here are a couple stocks that I will look at. These stocks are on my watch list. These are very important stocks. So now on to the charts. Now looking at the charts of the indexes, the S&P 500 still pushing higher on this tight range. The volatility looks like it has come down since these huge moves, but what I'm looking for is a nice trend like we had in the past, this past year, and I want that trend to continue. The Qs also look good, not as good as the S&P 500, the broad market, but the Qs are pushing higher. They got support above this 55-day moving average, and they look like they want to push into new high ground. Next, I'll look at SOX, the semiconductor index, still below this 55-day moving average, but we did get above this 22-day moving average, and it's looking like it wants to push. Obviously, this 55-day moving average can be potential resistance, and we did wick it on Thursday, but we still held Friday, and overall, the stocks are still looking good. DRAM had a nice push above this 22-day EMA. It was lagging these semiconductors because the semiconductors got above this 22 a couple days before, but DRAM bounced right back. Mainly led by SanDisk, it had a nice move and rally up to this 50-day moving average. But DRAM looks good. Once again, like the SOX, there could be potential resistance rallying up to this 55-day EMA, but it's looking good for now. The next thing I wanted to look at is Photo. Photo looks great. The 55-day moving average isn't pulling up on this chart, but the 50-day moving average is right around this 2174 level. It is the level that we are battling, trying to get above. I don't think that there has been 55 days on this chart, so that is why the 55-day moving average is not showing up. But this sector does look good. So now I'll take a look at IGV and cyber. IGV sort of hit resistance at this previous high, but IGV has come a long way off the bottom, and a lot of good there are a lot of good software stocks that are trending nicely. I guess, well, I'll show the individual names later, but but Cyber still looks good. We did have a down day, but I mean, what do you expect? Do you expect just 400 up days in a row? No. So Cyber still rallying, still looking very good. I don't know if I'd be a buyer up here because it has been on a nice rally, but depending on your time frame, depending on your strategies, you can make trades that fit your style. I'll just slide this over so I can go over the sectors. IGV. Oh, we already looked at that. XLV, the healthcare sector, trending nicely, looking very good. XBI, more concentrated in the biotech companies, once again looks very good. And IBB, another biotech ETF, looks good, pushing into new high ground. Next, I'll look at XLF, the financials. XLF has been on a nice trend, holding above this 9 EMA, trending very well. This is a good sign that the market can move higher, because when the financials are doing good, it sort of allows the rest of the market to do very good. And you generally don't see financials trending this high, pushing into new high grounds, if the market is also not going to go higher. I'll look at KRE, regional banks. They're also pushing into new highs, looking very good. I'm going to look at XLI, the industrials, once again pushing into new high ground. So when I'm talking about each of these sectors, you know, from a top-down analysis perspective, you can look at the sector, the indexes first. The indexes look good. Then you look at the sectors. Okay, I like this sector. Then you dive into the individual stocks within the sector and you look for relative strength inside that sector, and that's how you find, or that's how I find these stocks to buy and these stocks to trade. So it's sort of a top-down analysis, index, sector, stock. If the index looks good, the sector looks good, then you look for the individual stocks, and those are the ones you trade. So now looking at ITA, aerospace and defense, once again pushing into new highs, looks very good. And XLE, the energy names, pushing into new high ground. I don't really play energy because it's tied to oil and that's tied to the war. So I don't really know. I can't predict the future, but you can trade price action. But one thing about oil and the energy names is one piece of news can come out and these, you know, the energy stocks can either double or go to zero. So very volatile, very news driven. And it's sort of a difficult thing to trade, although some people do love to trade oil and energy stocks. Next, I'll look at the staples. They are not in new high grounds, which is good, but they are, you know, in this big base trending nicely. Just something to keep an eye on. Next, I'll look at gold. Gold, coming off the bottom, looks pretty good here. Might hit resistance at this 200-day moving average, but looking at the chart previously, when gold tends to, you know, come out of this downtrend, when gold comes out of downtrends, it tends to make some pretty significant and nice trends. So this could be a potentially new trend in gold. That is something I am keeping my eye on. GDX, a little bit more volatile than gold. If you want to play gold, you can play GDX for a little bit more juice, but the gold miners look good as well. And now I'll get into a couple of the individual stocks that I like, starting with a couple of the semiconductors. I like Dell. This is one that I've been tracking. This is one that I've been trading. Dell is pushing into new high grounds when the sector, like I was saying, index sector stock, look at the sector and then look at the strongest stocks within the sector. Dell is at new high grounds while the SOX is still under the 50-day moving average. So this is the type of relative strength that I look for, that you should be looking for as a stock investor. So Dell, Credo looks very good as well. clearly above this 55, looking like it wants to get into new highs. ARM looks pretty decent, although still below this 55. Teradyne, on the other hand, is above this 55, looking similar to Credo, looking like it wants to push into new high grounds. Max Linear had a good day on Friday, up 10%, closing above this 55-day moving average. Nebius, after this huge 34% day, is still pushing higher. It was up almost 9% on Friday, looking like it wants to push into new high grounds. AEHR, already into new high grounds. The stock looks great, although it's hard to put on a trade here because it could easily come down and retest some of these levels. That's up to you how you trade, but the stock is pushing into new high grounds. It is something to keep an eye on. Next, looking at a couple of the memory names. SanDisk had a nice rally off the bottom. This stock did get hit harder. It was down near 50% from its all-time highs, 2,000 down to 1,000. So it was down about 50%, but now it has come back strong and rallied up to this 55-day moving average. Micron got above its 55-day moving average on Friday. Micron looks really good. It didn't have nearly the decline that SanDisk did, although it did suffer a big decline. Actually, it might have been sort of the same, but Micron held up a bit better than SanDisk in my opinion. SK Hynix got above this IPO VWAP that we have been watching. You could have put a trade on here with a low below this day's low, Thursday's low, depending on how you trade. I do love trading around the IPO VWAPs and anchored VWAPs. STX looks very good. This might be my favorite name. This is looking better than Western Digital. Just as a comparison, they're pretty similar companies, but Seagate looks like it wants to push into new high ground, getting above this 55, getting above all the other previous moving averages. It looks good. Now I'll look at ASML. Makes huge machines to make the chips. ASML looks like it wants to push into new high grounds. AMAT doesn't look as good. Lam Research looks okay, but my favorite out of this group is ASML. Everpure obviously is the clear leader of this group, but I don't know about putting on a trade here. It is just going a huge distance in a very short amount of time. But this one is just on a tear. That is Everpure. Now looking at a couple of the fiber optic stocks. Light, as I stated in my previous videos, this is probably my favorite fiber optics name. Got above this 55-day moving average, retested it, and now is pushing higher. AAOI finally getting above this 55-day moving average. This one also looks good when you compare it to the other competitors. Corning still below the 55, Ciena still below the 55, Coherent still below the 55. So, just from a relative strength standpoint, that's why I like Light and AOI over the other names. And next I'll look at Nvidia, the 800-pound gorilla, huge stock, looks like it wants to push into new high grounds. This also looks like the best Mag 7 stock. This is very good for the general market. Nvidia can carry the market. Nvidia has done it in the past, and it looks good, although the earnings are coming up for Nvidia. GEV also looks really good in the AI power sector, getting above this 55-day moving average. Looks like it wants to push into new high ground. So those are a couple of the stocks that I am keeping my eye on. Yes, I do think the market is bullish, but we could reverse. But that's what being a trader is about, is having tight stops, having risk management, and knowing when to sell your stocks, knowing when to admit when you're wrong. So while all these stocks do look like they are going higher, maybe they don't. I don't know what's going to happen. But those are just a couple of the stocks that I am watching and keeping an eye on. So if you like this video, please drop a like, please subscribe for more videos like this, and that is it. Thank you for watching.